The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Hi, guys. Welcome to the show this morning. Steve Rhodes is actually doing something today. I think he's doing something that he's been working on for a while, a 7-part series on some educational things. And I'm John Logan, and I usually do the first hour. If you never listen to me, then maybe this will be enjoyable. Maybe it won't. But we're going to try to cover a couple of things actually with the scanner that we have today. Been a lot of questions about this. There's not too many moving parts with it, but we're going to try to cover some. And feel free to ask some questions along the way while I'm going over some of the things here. And I've been under the weather here in North Carolina. It's a little bit warmer than it is up north, but it's still 20 degrees here right now. Excuse me, where I'm at. And please bear with me. I'm trying to work through this. So let's take a look at just initially what's been going on with the market this morning, just to recap here a little bit. New box appearing on our daily situation on our S&Ps, and we'll explain what that new box means and what the definition of that is. But we got a new, basically very wide profile that's appearing here now, and there's not a lot of leverage points here on the daily. So in the weekly, we're kind of right in the middle of a fair auction there now too. But remember that the breadth is positive on the weekly and the daily. And what does that mean? That means that the internals of the S&P 500 are imbalanced on the upside. And we've talked this morning a little bit about some inflection points on the shorter term to 240. That's a pretty good number they came out with. Excuse me. 5.6% unemployment rate. As we all know, if you ever read into those numbers or looked at them from a different angle other than what the government puts out, that's not the actual employment rate. That's the unemployment rate of people that are basically, it's geared around people filing for unemployment and some other things, but it doesn't actually totally focus on the percent of people that are actually employed. And some people fall off the radar screen and all that, so they're trying to find work. So by their accounts, the unemployment rate is actually going down, and 5.8 to 5.6 is a pretty good number that normally, in my opinion, would have sent this to the moon, but we've kind of come a long way pretty quickly. And the short-term inflection points that we're looking at here on the 240 are 2058.50 and 2047.03 down below, and those are given in the scanner. And again, we're going to try to do a dissertation on this a little bit more today. Down here on this particular grid, and there they are, 2058.50, 2047.25. So that's the situation on the S&Ps. I'm going to go through the 10-year really quick because this has obviously been affected, and then we're going to get into the scanner. Here's the 10-year. I think I got Steve's stomach flu he had the other day. Daily, we had some inflection points to pay attention to. 28.15. I think we reached a high of 28.19 this morning. Here's the 240. We're going to just kind of ignore that. And, the news is out. Friday's here. Doesn't seem like we had a bad number on the unemployment report. and these notes and 30 years just continue to sit on the launching pad. I don't have to tell you that. Here's the 30-year situation. A little bit different than the 10, but again, support on the 30-year now. On the 240s, just like we talked about on the 10 years, 146.26. I cannot believe I'm saying 146.26 and 147 right now with those employment numbers, but 146.26 and 147.18. We've kind of rattled around in that particular fair auction as we've kind of forecasted it, and it looks like we're not going to sell off today, so we may be just rattling around in a range here. Here's the daily situation. You got big time support around 146 down here. We've almost reached 148. let's just see where we've been today. 147.25. We reached a low of 146.19. So right now, the long-term trend, to sum it up, is still up, and you've kind of got a range-bound situation more than likely today at worst on the 30-year, considering that the 10-year is actually, just, again, sitting on the launching pad like we talked about. So those are the two things that are, and the dollar is loving this. So we're going to, look at the dollar. Again, zero reasons to be short this thing on the long-term and the intermediate. As you can see, we're above fair auctions or balanced areas in an imbalanced kind of north standpoint here. And here's the new inflection points on the short term on the dollar on the 240s, 92.51 and 91.76 down below. So right now, that's the short term support for this. You can more than likely gear trades around that fence. And again, those are put out here on the scanner also down there, dollar. Boom, there's the top of the box. 92.51, and there's the 92.51 area that we just spoke of right there. So, all right, so what we're going to do is we're going to just kind of get into some definitions of this. There's a couple of videos on the TFNN website. They're very basic. It's very hard to cover a lot in a short amount of time in a 5 to 7 minute video. So the first thing, there's two parts to this scanner, really. One of them is our breadth indications up top. And I'm going to pull up our admin. Let me just do something really quick for you guys. Let me pull up something here. All right. I'm going to pull up our admin version of this. Wait for this to load. And what I think we've done is made this really, really easy by those speedometers, if you will, for the breadth part. So there's two parts of the scanner. One of them is I'll pull this back up. One of them is the dials up here. And what that's a function of is that's basically saying that with our proprietary algorithm, we are breadth positive. All right. And what does that mean? That means that the internals of the S&P 500. I'm going to go in here and I'm going to select none. I'm going to go in and I'm going to select S&P 500 from the left. And I'm going to wait for this to come up. And what that's going to do is that's going to say that these particular stocks in the S&P 500 on those 4 time frames, which are real time. The cool thing is, we developed this for ourselves, and we definitely don't want it delayed. We do not have delayed data running into here, but we're not displaying prices. So you kind of get the level of the market real time relative to all these profiles going on. And you also get indications, as we do on Agilent Technologies, when a new profile is attempting to appear, and that's an indicator in itself. We'll get into that a little bit later. But this particular dial right here, let's just focus on the weekly. That means that the amount of stocks trading above weekly profiles is, let's just kind of narrow this down even farther. Time frames to display. Let's just eliminate everything except the weekly. That means that all the stocks here relative to weekly profiles in the S&P 500, there are much more stocks actually, being this 34.7% crossover above. There are many more stocks trading above profiles in the imbalanced area on the north side than there are on the south side of that fair auction or profile or balanced area. Okay, and that means that there's a little blue color scheme up top. There's a pretty decent in the inside the box situation that's appeared here, but again, the main thing is when the crossovers happen. So if the amount of stocks trading above weekly profiles eclipses the amount of stocks trading below weekly profiles, we're going to get a little math formula that outputs a percentage strength in the breadth itself. All right, so that's the same situation on the daily. I'm going to go into that, and I know this is probably boring for you guys who have maybe kind of got this already or caught this, but we're going to get into hopefully a little bit more detail than normal today, and maybe you'll get some benefit from it. So I pulled up the daily fair auctions, if you will. I'm going to go, everybody knows Apple. I'm going to go to Apple. So the daily fair auction on Apple right now is between 105.64 and 109.70. Now, on our daily grid, this has crossed into positive territory. I'm going to show you exactly when that happened recently by our admin terminal. And I'm going to go in here and I'm going to see that recently, pull this up just to give you kind of a visual here. I'm going to kill our middle ground area, but recently we crossed back to breadth positive on this, on the intermediate. This is our daily intermediate between the 7th and the 8th, right in there. And we went to breadth negative between the 4th and the 5th. Now we got some late signals this time. We normally get some really cool situations to key off of, and they've been cool this time. Don't get me wrong, being that we've eliminated one side of the marketplace at times. Here's the situation on December 9th, December 10th. And I'm going to pull up the charts in a second. And what does this mean? This means that, again, the amount of stocks back in here that were trading above profiles switched to below profiles as the major component of the S&P 500. And then they switched back again positive between the 17th and the 18th of December. Now, recently, we've had a little bit of a noisy situation, and we back tested this. Oh my God, back to 2003. This is a very strong indicator, especially when you combine it with the weekly. Okay, here's the weekly. All right, so it's the same concept here, and the weekly stayed positive since that, basically since, believe it or not, folks, since October 20th, around in that area. So the long-term breadth has stayed positive. That means, what does that mean to you as a trader? That means that you're trying to find opportunities to buy the dip on the long-term basis. And what does that mean for the rest of the crowd here as we look at breadth? That means that if you're trying to short instruments on a broad scale, you're and they have some kind of beta significance to the S&P 500 or high beta significance to the S&P 500, that means that the odds are probably not completely in your favor. Now, when this long-term breadth, and that's on a long-term basis, when this long-term breadth changes to negative, as it has, looking back in time, I mean, it's been a very rare occurrence, and what it does, I'm gonna kill the middle ground here. As you can see, the breadth has been relatively positive. I can go back, way back. Hold on. Well, this is 2009 here. So as you can see, there's not been many crossovers to negative breadth, if any, since 2009. And when there is a crossover, I'm going to blow this up for you one more time. We're going to come back into this when we get back from this next break, folks. We're going to keep drilling down into hopefully some power here that maybe you can take advantage of within the scanner.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Steve's doing something this morning with a webinar series that he's doing some education with. I'm John Logan. I'm going to be here with you for the next about 40 minutes here. We're looking at our scanner here. We're trying to do a little bit of education this morning on this particular scanner. We had a lot of questions, and I'm really good at confusing people, so we're going to try to clear all that up today as much as possible. We've talked a little bit about the breadth already, and we've looked at some historical charts involving the breadth and try to define, these are as a summary type look. Looking at the internals of the S&P 500, are we within a balanced area for the most part? Are we most of the stocks trading above a balanced area? Most of the stocks trading below a balanced area? And the theory on that is really, as we get into, or as we eclipse a so-called balanced area on the upside or downside, and I'm just going to give you an example of that here. This is what we would call, on a very short-term basis, a balanced area. If you're looking at our screen, this is the S&P 500 on the 240-minute range. Obviously, we've had a big run up, and we've had some great news this morning. And it looks like this may be, well, who knows what's going to happen during the day. But right now, the levels or the outside envelope of the balanced area on this particular time frame are 2058.50 or 2047.03 down below. I use the term inflection points, by the way, a lot. Inflection points, the actual true definition, it's a mathematical term that I think some people on TV have picked up. I guess I've heard it a couple of times on TV lately, but it's basically a point in space where things could turn. In fact, I'll read the definition right now. Is a point on a curve at which the curve changes from being concave to convex or vice versa. So it's basically, and here's Wikipedia if you want to go into it. These are inflection points here. These are inflection points here. And they're points in time or points in space where things could turn or hope, as I talk about them, possibly turn. Let me just get rid of that. Okay, so as we look at the situation here, the theory is as traders, you want to try to compress your time frames to try to make as many points as you can in a short time frame. So the theory is here, there's two theories. One of them is as we get outside the balanced area, we're considered in an imbalanced state, and therefore prices could move relatively quick on either side of this. And therefore the trading opportunity in a breakout sense, you in theory can above 50% of the time could make more points in a shorter time frame because of the situation on the breakout. And as here's a good example here, breaking down below the balanced area, breaking above the balanced area. You get these kind of violent moves sometimes, and the powerful moves really are when you close below these balanced areas and go back and retest them. Those are the trades that I really like to enjoy. This is a 240-minute time frame, and those aren't the most powerful setups. I mean, I love the daily setups, and we've had some great situations where we're closing below, go back and retesting some of these balanced areas. So the scanner is going to give you the envelopes of those balanced areas on those time frames. And as we talk about the breadth and we're talking about trading S&P 500 stocks and trading the S&P 500 futures right now, as we look at that breadth as a kind of a guiding light, if you will, to try to tell you what's the temperature of the S&P 500 in general, on the long term, the breadth is positive and all the internals are cooperating. So when we go down into so-called inflection points or levels, support areas like this 1968 the other day, we still had the breadth stay positive on our weekly when we were down there last month. And that was an indication that it was okay to nibble here or start trying to buy support, if you will, this inflection point around this 1968 area. And we charge significantly more money for getting indicator packages and things like that. This scanner basically gives you all that information really canned up on the levels here, and if I pull up Apple, you'll see that on the multi-time frame view. You basically can see all the inflection points, and you've also got the breadth situation that's hopefully the guiding light. You've also got indications here of new supply areas and new demand areas trying to appear, and we'll get into that right after we get off this break, and then we'll try to put everything together towards the end of the show.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Here's the situation on the S&Ps. Obviously, the market's open. All the stocks are getting unwound here in the next 10 minutes. 2058.50, unfair highs 2047, unfair lows on the short term 240. That's our balanced area. We've come a long ways pretty quickly here on the S&Ps. Let's give some market updates, and we're going to get back into the scanner. Here's the 10-year situation. Amazingly positive, with the unemployment rate at 5.6%, and looks like the 10-year yield is. Are we below 2%? Is that true? My goodness. Who knows how this will end? Fundamentally speaking, 128.15 unfair highs on the daily on the 10-year. That's going to be a little bit of a lid there, but again, the situation of shorting this instrument has really try to block that out. Here's the 240s, short-term support 128.09 on the 10-year. Let's get right back into the scanner really quick. Let's try to finish up some of this. And we're trying to, a lot of questions about this particular little piece of software that we put out, just trying to answer some of those this morning. And as we've talked about the breadth situation, the number of stocks in the S&P 500 on this particular breadth, since we've got other indices right here, being positive on the long term and switching to positive on the daily 2 days ago. We also talk about inflection points. Those are support and resistance levels. Basically, we talked about that. And just going into Apple, and we'll pull this up again. These are the inflection points. These are the support and resistance levels, the red and the green, if you will. Apple's got support here at 109.70 again on the daily. And we've got a new profile attempting to appear on the 240. So how do you put all that together? So going into Apple, understanding that the breadth is still positive and the S&Ps are doing what they're doing right now. You've had a new profile appear yesterday. The breadth being positive means, for the most part, if you're looking at the best leverage situations, the breadth being positive and the S&P being dragged up by that concept of the breadth being positive, you're more than likely looking for opportunities to buy the S&P and also purchase stocks. So therefore, with that breadth positive situation on the intermediate and the long term, as you see this inflection point or this level or the top of the box, you're looking to buy breakouts. Okay, I don't know if that is hitting home or clear right now, but you got the leverage of the broad market in your favor on the long side, and you're seeing a individual stock break out above the top of a profile. That means it's more than likely the odds are in your favor to not try to sell this inflection point here or this top of the box or the top of our fair auctioner profile. It's to buy the breakout above that profile. Okay, that's looking back in time. What do you do now? So for instance, with that same theory in place, we're well above profiles. We don't have, okay, so the long trade, in my opinion, considering everything we've just said, is still on. These things aren't going to go in a straight line. Here's a 240-minute view. And a lot of times I'll look at 240-minute profiles to kind of regulate the trade. And what does that mean? That means that, I'm in a nice situation on the long side here on Apple. The market's trying to give me some help here. Apple on a relative strength basis hasn't been, the rosiest of situations lately, but I've got to, eliminate one side of the marketplace for me. And what I think the breadth does really is try to eliminate that one side of the marketplace, being the short side at this stage. So how do we regulate with the 240? So let me kind of get into that a little bit. As I look at Apple and I pull up my landscape view, all right, we talked about a new profile attempting to appear here. And let me show you why that's the case really quick before we go any farther with that. Okay, here's a 240-minute on Apple. We may have a new profile attempting to appear, is what the scanner's telling us right now, and actually the charts are not. The scanner actually has a little bit more lead time on this than the charts do in general, because we actually put something in the scanner to give it a little bit more of a hint of forecasting. So actually you're getting a little bit of benefit to that. So it's saying that we may have a new profile attempting to appear here. We've got a pretty wide profile, and there's some temporary targets at, let me pull this up. There's some temporary targets on the upside and a little bit of a short-term resistance around 113.68, if you can see that. So as I zoom in here and see that, I've been able to buy the breakout. We got about a 4-point move here in Apple, possibly before we may get another resting point. We don't have to hit those unfair highs, but that's kind of the upper limit of the short-term trade. The long-term trade, stops can be oriented around this 109.70 area, which is where it broke out from. Now, as I look at the entire big time picture here, Apple would not have any technical damage, so to speak, until we on the very long-term basis until we broke down below 97.64. So long-term traders and long-term investors of Apple, you're looking at some technical damage. Stocks can be oriented in a very tight manner below 109.70. Technical damage may start to happen on an intermediate basis below 105.64. So some guys would want to give it the entire fair auction based on your appetite for risk and your trading plans below 105.64 or 109.70 being very stingy. That was a recent breakout. Some technical damage on the daily will definitely be apparent and on closes below 105.64, and you'll have to rethink things. If we get below 97.63, the very long-term trade on Apple, and I'll show you this, the very long-term trade on Apple will be compromised down here, and that's that inflection point sitting there on Apple right now, 97.64, just like we talked about, and that coincides with that previous unfair on the weekly. So as you look at Apple, and as you've looked at it from the $60 area, we haven't had, and we got a big profile here, and that's a lot of room to be wrong. That's why I'm looking at primarily the daily situation below 105.64 as the barometer. Now we've had, on an intermediate basis, we've had some disturbances, namely if you played, and again, you got to kind of try to turn the rents the same way on your trading to kind of make sure that your statistical sample of trades are going to be, in line with each other. So for instance, you can't one day, bet the farm on something on an intraday basis, in my opinion, and then the next day take a long-term stance with, 10% of your account value. I mean, those type of scenarios don't work out very well over time, and they take people out in body bags who kind of shift around like that. But on an intermediate basis, the long-term trade's been, north for Apple, but on an intermediate basis, we've had a chance to actually save some money and get stopped out based on, okay, it's not okay to be long below here. It's not okay to be long. It's okay to be long in the fair auction again. It's okay to be long on the breakout. So you basically had saved quite a few points here using the levels, even with the long-term stance being the weekly view, uncompromised. Okay. So what the scanner does, in my opinion, is now that, and at those times when we had pullbacks in Apple, we also had to look at, what's the breadth situation at the same time. So is the breadth positive? Is the breadth negative? Where's the leverage? Do I want to try to short Apple for kind of a trade against the long-term trend, contra trade down? And is it okay, by the way of breadth, to do that? All right, so you've got first line of defense, or first line of offense, I guess. What side of the market, in the broad market, that your stock's trading in, the S&P 500? We've actually got the the NASDAQ 100, the Dow 30 in here, and we've also got breadth on the NASDAQ. So the initial guiding light being the breadth, and then you've got to look at the stock in general of what kind of either inflection points or support and resistance levels you can take advantage of while allowing the breadth to hopefully eliminate one side of the marketplace for you. All right, I said a lot there, and I apologize if I'm confusing people. But putting this together in a nutshell, again, just to kind of restate some of the positives of this, is, for me, the breadth eliminates one side of the marketplace, at least trading the S&Ps. All right, so just to recap, if the breadth is positive and I'm trading S&Ps, and I'm going to get into individual stocks in a second again, just to recap. If the breadth is positive and I'm trading S&Ps, and the breadth being positive at this stage on the intermediate basis, it's going to be buying breakouts above profiles as of yesterday, breadth positive. Now, breadth was positive up into and above this 2027 area yesterday. All right. So as we look at this, trading S&Ps, I'm going to use the breadth, and I'm going to drill down to the inflection points also in the scanner of those indices themselves or futures. Now, as we look at that in a similar fashion, I'm also going to try to get that as a leading edge for trading stocks like Apple also. So breadth is positive. Yesterday, breadth turned positive. Apple breaks out on the upside. There would be like zero reasons to go short Apple as of what was going on with the broad marketplace. Thanks, Basil. Didn't see that till right now. It gives you a leading kind of guiding light, and also eliminates one side of the marketplace. So as Apple's climbing here, at least that the odds of two things not being in your favor from the short side, being the breadth is positive and you cross the borders above the balanced area on the north side on Apple, there's, in my opinion, zero reasons to try to short Apple. That's the good news. Going long is, an opportunity that you need to decide on, and where do you put stops? You can orient stops around these inflection points. This, if you're entering the trade for the breakout here, I would, say that that's probably a good stop-oriented situation there. If you're entering the breakout here, I don't know if orienting stops below 105.64 is probably, a good thing to do. So, again, eliminating the short side completely, and then saying, to yourself, it's okay to be long, not okay to be short. So it's up to me to get long, if that's something that, you want to do. What we're doing also in this scanner, which I think is really, really cool, is as you mouse over an instrument in the very near future, if you get this now, you're going to be grandfathered in. It's going to kind of give you a little bit of a text paragraph of some of the things that I'm talking about in a very canned manner. Obviously, I can't, on a day-to-day basis, come in here and manually write a paragraph on every stock. So what it's going to be is a mouse over and a little bit of a canned paragraph. This is doing this, this is doing this, this is doing this, therefore the edge is this. All right, so hopefully that'll be even a little bit more Betty Crocker. And at this stage in my life, I'm a big fan of Betty Crocker type stuff. No pun intended there. So that's the situation on looking at the breadth in the scanner and then trying to relate that to a stock and also relate that relative to inflection points. Again, the reason I like this little thing is it just kind of gives me everything all at once. Like, okay, here we go, Logan. Here it is. And gives me also indications if new profiles are attempting to appear. Now, what I like to do also is I'm going to go in here and I'm going to do some filters. I want to find some things that are acting like I want them to act. So, like, I want to try to find things that, if we start getting some market turns south, I'm definitely going to start looking at some short opportunities. But in a strong market like we have right now, and those internals, at least on a profile basis, saying what they're saying, and we kind of cleared all the news here from Friday. We've had a big run up. The news is actually good. The market is actually up, which is just amazing. And kind of bouncing around here in almost like a, and this is the S&P's on a 240, and almost like a gathering itself kind of motion right now. Obviously, some people are going to take profits after a run up like that, but after that news, we could have a little bit of a pullback, but the long-term trend is still not compromised at all via these breadth factors up here. All right, so and there's a really good on the breadth situation. There's a little video, an interview that Tom did of me about that, and I talk about the rubber band expanding out a little too far and then stretching back, that type of concept. I think that's on the TFNN website. But I can also use the scanner as we go into break here in the next 20 seconds. I can go in here and try to find things on different time frames that are sitting right at possibly high probability support and resistance levels. So I'm going to look at things on a daily basis that are sitting at the bottom of profiles. And I'm going to take a look at those and see if those are ripe opportunities at all when we come back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes left here. Appreciate you hanging in there. We're trying to explain a couple of questions about the scanner that we use on a day-to-day basis. I personally use to try to figure out, where some major inflection points are. And the tide of the market, as Basil just stated, is a very good way to put that with the breadth, situation, the amount of stocks trading above or below profiles in the S&P 500, all the internals. This takes a lot of server resources to crunch all this, by the way. So that's at your behest here. Here's a situation, a little filter that I put into the scanner to try to find daily profiles that are stocks are sitting at the bottom of daily profiles. So I put in daily bottom, and it's showing me things that are basically sitting at the bottom of the fair auction. And, you know, the oil-related stocks seem to be just hanging around down here. So these are things, in my opinion, obviously to stay away from. These are things that have been, okay, let's just look at SWN. Considering that the breast positive and these are definitely crude oil related, these are something that market breadth is not going to have a lot of relevance here. But on SWN, we've just got murdered. And I apologize if anybody's in this stock long still. It gave you quite a few reasons. This is our long-term weekly. As we broke below profiles here, came back, had a little bit of a, and this was probably when oil was trading $100 or above, came back down below these profiles, got back in the fair auction, then closed below again. And this is kind of a really good example of turning the wrench the same way every day you go to work. You got some technical damage here. It's on the long-term basis, it's okay to be short, not okay to be long. We go back in, we get back below, it's okay to be short, not okay to be long. It's okay to be short, not okay to be long. It's okay to be short, not okay to be long. Gave you a great killer, just insane. Go back and touch the top of the fair auction here, which the scanner's given you these inflection points, by the way. Travels the entire fair auction. This is our long-term weekly. The daily obviously would have stopped you out of this playing the same game with technical damage on the north side. But the weekly inflection points are very, very powerful, and it gave you a chance to get back into this scene. And then it's just been ugly. And that's the long-term weekly. But you got some daily so-called demand areas that are happening down here, right? And looking at crude oil, and we talked a little bit about crude oil's got a new supply area or new demand area that's happening right now on crude oil on the February contract. So coincidentally, this particular stock, and we've got a, kind of Custer's last stance here again on SWN sitting here. This has nothing to do with market breadth at all. I just did a filter to find out some of the things that are, sitting on the bottom of daily profiles, right? And SWN, there it is. This is dynamically updating, so it's going to also throw new stocks in and throw old stocks out as this criteria is met or not met. So looking at SWN, I'm going to try to refer to crude oil here really quick on this one. And as we go into the Feb contract, I can show you really quick that we have a similar situation here. So I'm looking at, to trade SWN from the long side and try to catch a little contra trade bounce at all, crude oil is going to have to stay above 47.72, which is also given in the scanner because this is related to crude oil, SWN. And you've got an inflection point here to pay attention to on SWN. We'll try to 2460. We'll try to cover this a little bit more tomorrow, folks, during my show. Steve will be back, I think, tomorrow. But otherwise, have a good day trading and have a good weekend.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.